Hello, Sector Watchers. Welcome to the show. This is the 100th episode of Sector Spotlight on Tuesday, the 12th of October, 2021. My name is Julius de Kempenaer, and I'm presenting to you from Amsterdam in the Netherlands. As usual, please share your comments, questions, or feedback in any way, shape, or form that suits you best. I do my best to either answer personally or discuss interesting topics in the show. As mentioned before, today is a milestone as it marks the 100th episode of the show. And I want to thank all of you viewers for either staying with me since the start or coming on board over the past 2 years. Of course, I could not let the 100th episode go by without doing something special. And last week, I already mentioned that we would have a great guest. Ladies and gentlemen, it's my honor to welcome Mr. Tom Dorsey, the former president of Dorsey Wright Associates, and a pioneer in technical analysis, an avid user and promoter of point-and-figure charting. He is the author of the book Point-and-Figure Charting, the essential application for forecasting and tracking market prices. By the way, it's available in the StockCharts store. Over the years, Tom and his team at DWA have managed to set up and provide a wide array of technical analysis-based services and products, including a whole array of ETFs based on technical strategies. And that's interesting. Look for the ticker symbols with Invesco DWA in the name. The fact that most of these strategies are centered around relative strength and Tom's extensive knowledge on the subject makes him the perfect guest for a show that centers around this theme. This episode of Sector Spotlight will be a full half-hour chat with Tom, trying to pick his brain and see what we can learn from years and years of experience in the field. Tommy, my man, welcome to the show. I'm so glad you could make it, my friend.
Thank you. It's my pleasure, Julius. You know, we've talked in so many years together.
I know. It's crazy. We've discussed coming on the show for, I don't know, maybe it's a year already. And then, it never happens. And then I thought, with this 100 show coming up, I think this is the time. Now I need to get this man on my show. And here you are. I'm glad you could make it. First question, how does retirement, how's retirement for you? Because you have retired now, have you?
Yeah, I have. I sold, as you know, Dorsey Wright to NASDAQ. And then I was out there here. I'm a sole practitioner. And what I do mostly is trade options throughout the day. Not necessarily trading them, but doing special straddles and surrenders and things like that. But that's what I do pretty much during the day. But now I'm starting to be called on again to speak around the world from India and all over the place. And my Lord, I'm working again. But it's just me though. It's just me.
Yeah, and it's almost not like working, right? Because I know that you love what you do and you love to talk and you love to present and basically, preach the message, bring the message on investing and relative strength and point the figure to the rest of the world. Very good, very good. Hey, my first question to you is actually, I've read your bio and I read your LinkedIn, and I do believe that you went to school and you went to college and all that kind of stuff. But tell us a little bit about how you got started in your career. I believe your first job was with Merrill Lynch, Pierce Fenner Price, or whatever
Merrill
the name
Lynch,
was.
Pierce Fenner and Smith.
Yeah, Pierce Fenner Smith, right? That was your first real job in finance, right?
Exactly.
So
that was it.
How did you get there? How did you find it? What did you do?
Well, it's kind of an interesting story, but I'll take a long story short. When I was a senior in college, I was talking to a friend and I said, I'm tired of being poor. I was driving a car, a Chevrolet Vega that had no reverse. Wherever I parked, I had to make sure I was going to go forward out of it. I learned a lot about life that just always go forward. But I wanted to find some place that I could make money. And he said, then go to the stock market. I said, what is the stock market? What do they do? He said, Merrill Lynch, across the street here. And I had no idea, but it sounded like it was for me. And I kept knocking on that door and I kept knocking on that door until I got so tired of me hanging around, I got hired. And there I was. There I was, learning to be a stockbroker, and I had no idea what stockbrokers do.
Persistence. That was the first thing that you learned there.
Absolutely. It's the only way I got in.
So how long did you do that?
Pardon me?
How long did you do that? How long?
I was a stockbroker for probably, I guess, 7 years or so. And then I was offered, see what happened was options debuted back in the mid 1970s. And I gravitated to options right off the bat, simply because prospecting as a stockbroker was very difficult after 1974 because people had been wiped out during 73, 74 correction. Nobody wanted to hear about a stockbroker. So I thought to myself, what's the one thing that no one does in the office? And that was options. I said, okay, that's what I'm going to learn. So I started learning options. Long story short, Wheat First Securities got wind of me at one point and offered me an opportunity to come across the street and develop and manage their first option strategy department. And that's where the whole point and figure concept begins.
So basically, you were taught, or you learned two jobs on the job, basically. You learned to be a stockbroker on the job, and you learned options on the job.
Yes,
is that right?
That's exactly right, because I had to find some way to be different from the rest of the stockbrokers as they prospected people who were wiped out. I mean, I would prospect every day. Good morning, Mr. Jones. My name is Tommy Dorsey. My company is Merrill Lynch, Pierce, Fenner & Smith. The reason I call is twofold. Is first, I'd like to introduce myself. Second, I'd like to avail the service of my firm to you. Do you invest? And the phone would click down, not a word. And you would do that 100 times a day. 100 times a day. And by the end of the day, you may have had 3 people who had some sort of an interest. But you had to find an axe to grind, something that made you different. And the options made me different. But it also set me off with on a new tangent.
The introduction, the call, actually makes me think of the movie, The Wolf of Wall Street. That sounds like a real cold call.
Well, it really was. We were allowed to back then. Now you can't do that. So we would do that 100 times a day.
Different time, different day and age.
Oh, absolutely, absolutely.
Hey, listen, how did that? So you're into stockbroker. You want to be different. You bring in options. When and where does the point and figure stuff come into the mix?
Well, that's a great question, because when I was offered that opportunity to come across the street to Wheat First Securities and develop and manage the first option department, I jumped at that chance. And I was given carte blanche to hire anyone I wanted, do whatever I needed. And the first person I hired, his name was Steve King from Charlotte, North Carolina, great guy. And he came into he's the first guy, it's me and him. And he brings a book in that's called The 3-Point Reversal Method of Point and Figure Stock Market Trading, written by A.W. Cohen. And I think this book was written back in the 40s or 50s. The cost was like $2.95. And he said, I'd like you to read this so you'll understand the operating system in my mind when I come to you with stock market, with the stock or sector or whatever. I said, I'll be happy to do it. I took it to Virginia Beach that weekend with my wife. I read the first paragraph of the introduction, and my life profoundly changed. That, if you've ever had the epiphany, Julius, where you knew exactly what you were here for, why, what you had to do, how you had to go forward, I knew God put me here on this earth to learn point and figure and to teach it to my brothers and sisters the rest of my life. And I hadn't gotten past the introduction yet, and I knew this was the direction.
Yeah, I can relate to that feeling. For me, that epiphany was when I, for the first time, in my very basic spaghetti bastard Excel sheet, had the first version of relative rotation graphs, RRGs, on my screen. When I had that was the first time that I knew that, hey, this is something special. This is what nobody has. And everybody is talking about sector rotation, but this thing actually shows, or with this thing, I can actually show people that sectors and markets are rotating, and they are rotating around the benchmark, and they do that in a clockwise fashion.
I absolutely love what you've done.
So for me, that was my moment, and that I think it changed my life, because it basically brought me to where I am now and to what we do. So I can certainly relate to that epiphany. It wasn't a book; it was something that I was putting together, but it comes from the same background, because the reason I actually started playing around with that, because I wasn't really a stockbroker. I was an analyst on a trading floor. And, just like stockbroking, being an analyst on a trading floor is a pretty competitive business. This is the early 90s. So I'm a decade or two behind you. But still, the environment was the same. It's a pretty competitive area. and you needed to stand out because all these fund managers, all these portfolio managers at institutions, they got calls from tons and tons of analysts and brokers from every investment bank in the world who want to do business with them. So you actually had to stand out. And you know, for you, that was the point of figure chart. And for me, it was the RRG. And so, you know, that I can certainly relate to that turnaround moment, that aha moment where, you know, okay, now this is something that I actually need to pursue and develop further. And so you started with point of figure. Tell me how did you, once you had that and once you finished the book and probably you had to make up with your wife after the weekend because you completely forgot about her. But I believe you and Cindy are still together after all these years. So I think you did something right.
That's right. 45 years now.
There you go, man. Wow. That's another lesson a lot of people can learn from you. But once you got that point of figure thing, you know, under your belt and you had it, how did you actually bring it into your business? How did you start to actually utilize it to your benefit?
Well, the first thing was the epiphany in realizing that I had to start my own company and begin teaching this to my brothers and sisters. Because the reason I started Dorsey Wright and Associates is something different than many people think. I was thinking about the little old lady who lived out in the country, and she would have a better life if she dealt with an advisor who was supported and trained by Dorsey Wright. And she was the vision for me. It never was money. Money was never an important consideration. This little old lady was the important consideration. So I had to begin learning everything I could because when I started with this, it was only in the introduction. So I had to go from the beginning. And as we went through this and we began to learn more about it, relative strength came into the picture. And that was the epiphany again. We realized this was the direction. And it's just like I've got a quote from Jim O'Shaughnessy here, who wrote the book, What Works on Wall Street. Out of all 10 strategies that he has in the market, relative strength plays the most important part. And in the stocks that don't do well in hitting that strategy, they don't have relative strength. And we knew this was the direction. The simplicity of relative strength is the interesting part about it. If you've been to fourth grade, you can do this. And I have been into a seventh grade class, Tammy DeRosier, my right hand, and I, and we taught point and figure to seventh graders who learned it in 40 minutes. And so we absolutely knew this was the right direction because with point and figure charting and relative strength, you're simply dividing one thing by another. And that's why we have been able to be so prolific in the ETF fund area by creating these ETFs and funds through relative strength. And I'm absolutely blown away every time I do this. I'll go into a particular, let's just say I go into a particular fund that's a great fund and it's done extremely well. I simply click where it says send to on the DWA charts. It says send to. I say, okay, over here to portfolios, goes into portfolio. I click matrix. What that says then is, okay, take all the stocks in that fund and do a relative strength calculation against each one of them. It's an arm wrestling contest. And then list them out to me best to worst. So if you looked at the Standard & Poor's 500 and you said, okay, let's do a relative strength calculation against every stock in the S&P 500, that's 250,000 stocks or calculations because one has to go versus the other, versus the other, versus the other. 500 times 500, 250,000. But we can do that now because of the computer age. You can press a button and then arm wrestling contest goes on. And the next thing you know is everything is listed out for you exactly what you want from best to worst.
I know it's that is the you actually remind me of a slide that I have put together for presentations that I do, and I'm going to bring that up because it's what you just said is exactly what I've been telling people, and it's the basis for relative rotation graphs. And here on the screen this is part of our presentation on introduction on RRG. And one of the things that RRG tries to capture is because there are so many possible combinations, and to explain people how many possible combinations there are, I have this chart. So this one lists the 11 S&P sectors. And if you do a matrix, you get 11 times 11 is 121 potential combinations that you need to look at. Now, of course, when you don't need to look at energy versus energy, which is the one that's blinking right now, or technology versus technology, that doesn't make any sense because that's a straight line, right? So you can deduct the entire diagonal. So from a 121, you can actually subtract the number of elements in the universe. Now, when you've looked at technology versus financials, you've already seen financials versus technology. You know, same for utilities versus energy. You've already seen energy versus utilities because they're the reverse. They're exact reverse. So the bottom half of this chart can also go. That still leaves me with 55 potential combinations. And it's actually that the number of combinations balloons. And you talk about the S&P 500. I just limited that to the S&P 100. And that actually gives you 4,950 potential combinations to look at. And that what drove me to RRG and to bringing all those combinations into one graph, because a basic RRG, you know, the RRG of the 11 sectors actually shows you all 55 relationships. But what it does, it shows you that in one image. And I think that's the crucial part, to be able to see and visualize all those relationships in one image. And in a way, I think it's the next step from your matrix. It's basically taking your matrix with all the numbers into a data visualization product. So, you know, there's a lot of resemblance and a lot of relationships where your work and mine actually touch upon each other, I have to say. So you already mentioned the products, the strategies that you brought into ETFs. I'm very interested to hear how did you actually, because when did PDP get started? That's 15 years old now, 10, 15 years old, PDP?
Oh, PDP?
Yeah.
Oh, yeah, definitely. That's the very first one that we came out with.
Yeah, when was that introduced?
That's the technical leaders. Oh, you're asking me to remember stuff. You know how old I am.
You know what? We got the screen here. So PDP, let's bring up.
It's at least, I would say, 15, 20 years.
Let me see. PDP. Our history starts in 2007. But I believe it was, is that the start of PDP, 2007?
It could be. I mean,
yeah, probably. So this probably goes, so back in 2000, you probably worked on it, 2005, 2006. So how did PDP come to life? What needed to happen to get Invesco to actually bring this to the market as an ETF?
Well, Invesco knew us. They knew us well. And they wanted to find something that we could do with our point and finger to make this happen with you. We took our technical leaders, and this is the interesting thing, that PDP ought to be part of everybody's portfolio. It's the 1,000 stocks, 1,000 large cap type stocks that we put together in one index, US stocks. And then we do a relative strength calculation on each one. That's that arm wrestling contest. And we make each one of them go against the other. I can't tell you how many. Boy, we've got 1,000 stocks there. There's got to be the number of relative strength charts created by that is just by the computer is unbelievable. And it's done once a quarter. And all we do is it lists them, strongest relative strength to the weakest relative strength. We take the top 100. That becomes your PDP. It stays that way for the next quarter. At the next quarter, we redo the same thing, same arm wrestling contest. Take the top 100. That's it. How simple can you get?
Yeah, it's great. But the thing is that, I thought it was super interesting that because, back in 2005, 6, 7, and before, technical analysis by Wall Street was still, judged as kind of voodoo. And,
right.
There was a hate-love relationship between technical analysis and Wall Street. And so for a firm like Invesco to actually go with a technical strategy, who did you have to bribe for that?
Well, we knew people there well, and they could see Dorsey Wright was gaining many, many clients. We've become the foremost, I would say, authority on relative strength and point and figure on Wall Street. And I've taught so many branches and firms that take us firm-wide. You might look at a particular firm, like back at Prudential, every broker has it on his desk. Same thing with Merrill Lynch at one time. I don't know where they stand now. But we made a very big dent on Wall Street. So Invesco knew, they want to get to these people, they got to come through us. So create a product with us and Invesco, and they're home free. And that's what happened with PDP. That's what happened with FV, First Trust. If in FV, which is taking the sectors, it's the top sectors that First Trust has, putting them in a relative strength chart.
Which one is that? FV?
That's FV.
Like this? Yeah.
Yeah. First Trust, Dorsey Wright Focus Fund.
There you go.
You can take the top 5 sectors, putting those in there, and that's it. Same relative strength calculation. We probably put together $4 billion in a matter of a few years in that one ETF.
Those are very impressive numbers. Those are very impressive numbers. Hey, so for the last bit, I would love to bring together your knowledge on options and relative strength, and could you tell us a little bit more about how you see or how you advise people or how you suggest people can use the combination of the power of relative strength analysis and the versatility of options as an investment instrument, and basically put the two together to make a dent in your own portfolio, or make a splash in your own portfolio, basically. That's
simple. First off, you've got to have an understanding of options. You can't just say, okay, here's Joe Blow, and he's going to buy calls and over leverage and hope he's successful. That's no good. You got to have an understanding of options. You have to understand what the covered right is, what an uncovered put is, how those are the same. Once they have an understanding of options, then you go to, how do I select what I want? I want to be long the market. Well, there are many ways in options that you can be long the market. You can just buy calls, you can sell puts, you can buy calls, sell calls, buy stock, sell calls. You can just, you can do all kinds of combinations and permutations, but you have to begin with a list over here. That's the relative strength. That's what we do, and that's what you do. You come up with a particular idea on relative strength. But here's, let's say a person wanted to buy a call on Coca-Cola or Pepsi. Both of them fundamentally sound. You look at the fundamentals, oh, these are great. I want to buy a call on them. I don't know which one though. When you look at the relative strength on each, or not relative strength, but the fundamentals, let's say Merrill Lynch has a rank number 1 on Coca-Cola. Let's say another major firm has a number 1 rank on PepsiCo. Well, okay, those are both fundamentally sound companies. Which one do you select? I have no idea. Each one could be could be the better play. So before I put my option strategy on it, I want to know which one I should have. You get right down to the fine tooth of dividing, let's say, Coke by the price of Pepsi. Take that number, plot it on a point and figure chart, and there you have your answer. I have a fundamentally sound company. I have a sector I want to be in, and the fundamentally sound company has positive relative strength. I want to buy calls. I'm going with Coca-Cola. That's the simplistic way of doing it. Yeah. So basically, you do, as I view options, as basically as an instrument to get exposure to the market. It's just an instrument. It's not, because I got a question asked recently by one of my viewers.
And he asked me, Julius, do you use options in your investment? And if so, to what percentage? And my answer was, I mean, options for me are an instrument or a means to get exposure to a market. So it's not that 10% of my portfolio is invested in options. I'd like to talk or to think in terms of delta. Cash equity, cash stock as a delta of 1. An option could have a delta from 0.1 to almost 1, or 1 if it's deep in the money. And then you can start playing and making all these combinations. Puts have a negative delta. So you're long the stock and you're long puts, potentially your portfolio could have a delta of 0.5 for that stock. And with that knowledge, you can start playing and writing options on existing positions and that kind of stuff. If you want to buy a stock, you can write a put. You want to buy it anyway. Why not collect a little bit of premium? And if it drops, then you buy it at a lower price and you have collected your premium. So I think that's the most important message that we have to give to people, that options are not an investment as such. You don't invest in options. You use them as an instrument to build your portfolio.
That's exactly right, Julius. If you look at like an at-the-money option that has a delta of 0.5, I buy 2 at-the-money options. I just equal buying 100 shares of the underlying stock.
Exactly.
So it's the simplicity. It's just arithmetic that you don't have to have even gone to college. I mean, this is basic.
That's right. It's 7th grade, right? 7th grade.
Basic arithmetic, and it's so fantastic. It's something that I do every single day. The Option Clearing Corporation came up with a great moniker: options give you options.
Yeah, that's true.
That's exactly right.
That's true. Yeah, and I love to use the RRG to tell people, so because options can also help you in a very easy way to get short positions and protect yourself against stuff. And RRG is my tool, my weapon of choice, as I like to call it, to tell people, so if you're in the top right-hand quadrant and you're rolling over, the big momentum is gone and you go into a correction. That's a perfect time to start writing calls. If you're in lagging and you start to be curling up, maybe you want to write some puts. So you can have all kinds of combinations by looking at where all these tails are on the RRG, and that's all based on relative strength and relative rotation.
Do you have a picture of your RRG? Can you show that dynamically how that works? Because it's the coolest thing in the world. To me, this is the only other step past basic relative strength that you're going to see.
All the people here will probably have seen. Well, maybe we have a couple of viewers that come to your name to this video, but most of the people who are watching this are very familiar with RRGs and the dynamics of it. And you've seen them before, and you know that
Sure.
So leading stuff, strong relative strength, weakening, relative strength in a dip, lagging, full on negative, and then improving is where it starts to curl up. And you can bring in your options and use this tool to actually build a portfolio. And I love that. I love that phrase: options give you options. Hey, Tommy, we need to wrap it up. We're already approaching our end time.
You're kidding? We just got started.
I know. Maybe we need to do it again, and we go a little bit deeper, and we do a deep dive, and we can talk about actual markets and do some live comments with you. But for now, I'd love to thank you for being here. I hope we can meet again in live in the future when we can travel again.
Yeah.
But for now, thank you so much, my friend. Thank you so much. And everybody's been watching. Thank you for watching. This was the 100th episode of Sector Spotlight. And remember, Sector Spotlight airs every Tuesday from 10:30 to 11 a.m. Eastern here on StockCharts Television.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.